Rogers Holdings chair and legendary investor Jim Rogers is back with his latest warning that the next bear market is going to be horrible, compounded by too much debt and a trade war. The U.S. stock market is still in the midst of the longest bull market run in history, but that run will be short-lived from here on out, Rogers warned in a recent interview with Kitco News. Later this year, Rogers said, or next year when the economies around the world are getting bad, Mr. Trump is going to blame everything on the foreigners, the Chinese, the Germans, the Japanese, everybody, and then the trade war will come back, and then it's all over. Rogers added that trade war tensions could continue to rise, and a new fight is brewing with France, and Trump will continue to push forward because he desperately wants a win on this front, due to how easy he said trade wars are to win, dubbing himself a tariff man. Mr. Trump is going to come back. Mr. Trump believes in his soul and his brain that trade wars are good and that he can win trade wars, he said. Mr. Trump knows that he is smarter than everybody else, so he knows that he can win a trade war, and it will come back strong. When the American economy gets bad, eventually, he's going to blame it on trade and the trade war, and it's going to be terrible. Rogers went on to speak briefly on recessions and how it generally takes a number of failures on several fronts to really kick one off. He said the way these things have always worked. In 2007, Iceland went bankrupt, and most people had no clue about that and didn't know or care. And then later, though, Ireland went bankrupt. Few more people noticed. A little while later after that, Bear Stearns went bankrupt. A few more people started noticing. A few weeks later, Northern Rock went bankrupt, then people started catching on. Eventually, Lehman Brothers went bankrupt, and by then it was on the evening news all over the world. On a recent call with etmarkets.com, Rogers restated his concern that a bear market was on the way, and investors should be on the lookout for small signs to avoid another crisis like 2008. Although Rogers could not give a timeline for the bear market to arrive, he did say that it will be the worst in my lifetime, a prediction he's stuck by for a while now, and the key to spotting a market correction lies within smaller markets. When asked, how do you view U.S. stock markets currently, he replied, I'm not investing in the U.S. stock market because I expect problems to come in the next year or two. I am not buying shares. In the U.S. market, some of the stocks like Apple and Google go up every day. They never go down, which is a dangerous sign in any stock market. When you have a few stocks always going up and the movement has been concentrated, and that seems to be what's happening in the U.S. stock market. We then asked him, any timeline, any horizon that you have for this bear market that you are foreseeing? And Mr. Rogers said, no, I'll just say it will be the worst in my lifetime. It has been over 10 years since we had a serious bear market in the United States. I would suspect by the end of this year or next year, it'll start. These things always start small, where people are not looking, and then they work to the major markets, and then you see them on the major news. In 2007, Iceland went bankrupt, but nobody noticed or cared. Then Ireland went bankrupt. Then a few weeks later, Bear Stearns went bankrupt, and a few weeks later, Northern Rock, the English bank, went bankrupt. Then, eventually Lehman Brothers went bankrupt, and by then everybody knew there was a problem. But it had been there for over a year, and it has always worked that way. It starts when we are not watching. It has already started. So how long can the stock market possibly stay completely disconnected from economic reality? On Monday, the Dow Jones Industrial Average rose just 27 points, but that was good enough to push it to yet another new all-time record high. Investors have been absolutely thrilled by the extremely impressive bull run that we've witnessed so far in 2019, but there is no way that this is sustainable. Wall Street may be celebrating for the moment, but meanwhile, all of the hard economic numbers are telling us that we have now entered a new economic slowdown. Just like in 2008, it appears to be inevitable that the party on Wall Street is about to hit a brick wall, but nobody should be surprised when it happens. Everywhere around us, there are signs of economic trouble. Right now, companies are literally shutting down all over America. For example, just take a look at what's happening to the trucking industry. I recently warned about the trucking bloodbath that was unfolding, and over the past week it has greatly accelerated. On the 12th of July, we learned that trucking giant LME had abruptly shut down. The following comes from Zero Hedge. Less than truckload carrier LME has reportedly suddenly and abruptly shut down its operations, according to FreightWaves. The company is a regional carrier based in Minnesota that operated throughout the Midwest. The company had terminals in 30 locations across the U.S. and through interline agreement services all of North America. It also worked with major companies like 3M, John Deere, and Toro. The company reportedly included over 600 men and women and has been listed as having 382 power units, 1,228 trailers, with 424 truck drivers. Then today, we learned that Timmerman Starlight Trucking suddenly shut down without any notice. 40-year-old California trucking outlet Timmerman Starlight Trucking Inc. is the latest victim in the trucking apocalypse and announced that it would be shutting down effective immediately, according to FreightWaves. 30 employees are expected to lose their jobs as a result. The company is based in a mid-sized city about 100 miles east of San Francisco, had a fleet of 30 trucks, 150 trailers, 28 drivers. The company's owner cited a tough freight market and environmental regulations as reasons for the shutdown. The company announced the shutdown on its Facebook page. Of course, those two trucking companies are definitely not the only victims of this bloodbath. According to Business Insider, ALA Trucking, Williams Trucking, Falcon Transport, and New England Motor Freight have also completely ceased operations in 2019. If the U.S. economy really was booming, this would not be happening. Meanwhile, major retailers continue to fall like dominoes. Charming Charlie is headed for bankruptcy and will be closing all of their stores. Fashion accessory retailer Charming Charlie will close all its stores after going bankrupt for the second time in less than 2 years. More than 3,000 full and part-time employees could lose their jobs. Charming Charlie Holdings, Inc. filed for Chapter 11 protection in Delaware, with plans for going out of business sales at about 261 stores, according to court documents. The chain expects the liquidation to take about 2 months. In addition, we just learned that Fred's will be shuttering another 129 stores as it desperately attempts to stay alive. Troubled discount merchandiser Fred's has announced another round of store closures. The chain will shutter 129 stores, leaving it with about 80 locations, USA Today reported. Going out of business sales have already begun. Not too long ago, I went to a going out of business sale at a local store that was closing down, and it was definitely depressing. At one time, the shelves had been packed full of products. By the time I got there, people were clawing through the small handfuls of deeply discounted merchandise that still remained. Sadly, such scenes are being repeated over and over again all around the country. In fact, things are already so bad that even Manhattan retailing legend Barney's is likely headed for bankruptcy. Barney's may be on the cusp of filing for bankruptcy protection as the luxury Manhattan retailer contends with high rents and shoppers going online, according to two media reports. Reuters, citing unnamed sources, reported Saturday that Barney's had tapped law firm Kirkland & Ellis LLP and is weighing a potential bankruptcy filing among other options that could occur in the coming weeks. The all-time record for store closings in a single year was set in 2017 when 8,139 stores shut down. According to a brand new report that was just released, we are on pace to absolutely shatter that old record. In fact, Coresight said that the number of store closings in the U.S. could hit 12,000 by the end of this year. The going out of business sales and liquidation of other brands is expected to continue. Coresight estimates closures could reach 12,000 by the end of this year, the report said. In The Beginning of the End, I painted a picture of a future in which America's communities would be littered by boarded-up stores, that had been abandoned by major retailers. Now it is happening, right in front of our eyes. Everything that's taking place in the real economy makes perfect sense, and unfortunately our economic problems are likely to accelerate significantly in the months ahead. What doesn't make sense is what we are witnessing on Wall Street. There is no way that stock prices should be rising like this, but financial bubbles don't typically follow rational patterns. Instead, they usually just keep going until something comes along to end them. And considering everything that is going on in the world right now, that something could definitely arrive sooner rather than later.